Good morning, this is Jack from Charting the Markets, and this is the pre-market webinar for the morning of 19th of March. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts, and I'm not here to issue trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. All right, great. Let's have a look at the ES this morning. Now, the first thing to say is the inverse head and shoulders. I was thinking these might well fail. They all failed. They all failed yesterday, and they failed with a target at a retest of the prior low, which is at the bottom of the head, and ES made that yesterday. YM made it yesterday as well. NQ broke down yesterday and made the retest of the prior low overnight, and RTY broke down yesterday and made the retest of the prior low overnight. So far, so great. That is also good, and this little head and shoulders, which had broken down and never failed, with a target in the 2469 area, has now made target as well. So hang on, wait a second. Let's just want to. So that's great, and I have to say, I was coming to the charts this morning with the impression, really, that it would probably continue down. But I've had reason to wonder whether we might see a strong rally here, and the main reason for that is all the divergences here. We have a possible 60-minute buy signal brewing on ES. We've got another one brewing on. Oh, hang on, wait a second. Sorry, I haven't marked that in for some reason. We've got another one brewing on NQ, although really that's a weak one, I think. We have another one brewing on RTY. Damn it. Right, hang on. I'm going to have to replace a couple of these charts before I post them this morning. Sorry, I'm always noting down onto two things, which is on the chart and on my notes of the chart, which I send out. And sometimes I forget one if I'm in a hurry. Now, I've got a possible 60-minute buy signal brewing on YM. I've got a possible 60-minute buy signal brewing on DAX. I've got another one brewing on ESTX. So the usual 6, we've got possible buy signals brewing on all of them, which is a lot. Now, these haven't fixed yet, and they might not fix, and we might fall through the divergences. But it's got me concerned. And we're pretty close to a possible buy signal brewing on Nikkei as well, although we haven't got one yet. Nikkei, we did have an IHS which had broken up here. That failed overnight, and that's got a retest target at a retest down just at this low, slightly above 51,000. So, got to say, this has got me wondering about a rally, and it's not alone. DX, which has been rising when oil trouble has been rising. We've got a 60-minute sell signal fixed. We've got buy signals fixed on USD and GBP USD. We haven't really got a lot on the oils, but I've got to say I've got a couple of sell signals fixed on the grains, which have been moving against trouble in the Gulf as well. And I think I've got at least one sell signal. Yeah, I've got one on HO. So it's just a lot of sell signals fixed and brewing, suggesting that things might go the other way today. And something is new happening on the news today. I was talking yesterday about the attack on the Iranian oil facility, and the corresponding one on the bigger picture. This was, of course, on the corresponding reply with an attack on the Qatari gas field and a threat to bomb a whole load of Saudi oil fields. And yesterday night, something new happened. Trump walked it back. He said the Americans had nothing to do with that. It was all the Israelis. That is actually an attempt at de-escalation. This is new. We haven't seen Trump do that before. And I'm wondering if he actually means that, whether we might see the Iranians pull back from those planned escalation and attacks, and maybe we see a bit of a rally here and a pullback on oil. So, but I have to say, de-escalating from Trump, that is new. And with all these divergences, I'm just saying, I am concerned about a possible rally here. It might be it'll just fall through it. Frankly, the news is crap. The war's not been going well at all, and Iran looks as though it is settling in for the long term. This is all bad. So because it does suggest that we're going to see some much higher prices on oil, but at the moment, they're fairly muted overnight. We will see. All right, let's have a look at the bigger picture charts. Okay, bigger picture charts, of course. We've got a head and shoulders chart. Head and shoulders broken down on SPX with the target in the 65.40 area. We're getting relatively close to that now, and I'm thinking we're probably going to make it. But I would note that we've got a possible double bottom set up here, and we are testing the 200 DMA, which is a big level, which we broke back over. Well, we broke below it for the big April decline, back tested it and went, and then we broke back above it and back tested it and went last May. And this is the first time since then we've actually touched the 200 DMA. This is a significant support level, which quite often results in a rejection when you reach it. We could see a rally here. We don't have anything really on the hourly or 15-minute charts, but I have to say that has me wondering. Looking at the Qs, we're pretty close to the 200 DMA on that, but we haven't quite reached it. Resistance is obviously at the 50 DMA here, but the last rejection was at the daily middle band, although normally it's been at the 50 DMA on this move. We're still expanding on the bands here. Would this be a bad time for a rally? Not an awful one, no. And if we're seeing what might be whispers of potential changes in attitudes in the Middle East, then certainly that could change. That could change things somewhat. In terms of the dia, I would note that we've got a possible RSI 5 buy signal brewing here, and I think we got one also on SPX. We do. I haven't marked them in, or at least we do as soon as we retest this low, which we'll do at the open. Qs retest the low, and we won't get on there. But I am wondering about a rally here and another test of the daily middle bands while the bands are still expanding. Although I have to say on SPX and dia, the bands are now widened out to a degree where we could start making some lower targets of significance. So we shall see. Looking at IWM, the RSI 14 sell signals reached possible near miss target. Retest this low, which we will do at the open, and we'll have a possible daily RSI 5 buy signal brewing here too. What I would also say is, this is, hang on, I think I've drawn this on the hourly chart. Yes, this is a possible head and shoulder neckline. And it's largely formed. Even if we see a breakdown, we'd be looking at a target at about the 216 area. That could break down. We've also got obviously the dia pattern, which is broken down, and that pattern has a target in about the 450 area. So we've got a couple of decent patterns which are broken down. We've got some downside targets below. We've also got patterns on the Qs. This is a big double top. IWM, we've got a possible head and shoulders breaking down. We have targets to go much lower here, but really this is all about Iran at the moment, and I'm watching a lot of news on Iran at the moment, and this escalation that happened yesterday was big, and the walk back overnight might be boots on the ground. I don't think that's going to do anything good for the market at all, and I think they are seriously thinking about putting them in and taking over a string of our Iranian islands over about 500 miles, and that could, well, more American servicemen are going to die. The war's going to get less popular in US. That is possible. Even though it's already exceptionally unpopular in the US. No one wants to see boots on the ground. But it does look as though if they're going to try and bring this to a resolution where the regime is overturned, and that does seem to be the main war aim now, then I don't see how they're going to do it without troops on the ground. But I think troops initially would just be on the islands. It wouldn't be in mainland Iraq, but I think we would start losing more American troops, because it's like they haven't actually sent anyone in to escort someone through the Strait of Hormuz yet, because they're going to lose ships, they're going to lose sailors, casualties are going to go up, and they've been reluctant to do that. They've also been reluctant to put boots on the ground, but it does look as though they're very seriously thinking about it. A whole load of Marines have been sent to the Gulf, and they may go ahead and do it. Personally, I think it's a bad idea, but then I thought the whole war was a bad idea. But I think that would be negative for the markets, and we would see how that went. I don't think it would bring the war any closer, and I think it would increase casualties. That's going to be bad. So, I think we've got a whole load of shopping patterns here. Personally, I think the war was a horrific mistake. I think it's going to cause significant damage. I think it's probably going to last for several weeks or months, and I could be wrong. Maybe Iran's just going to roll over. They say, leadership just collapses, and maybe the Iranian or the other thing I'm thinking might effectively end the war, although it wouldn't end the war, but it would end the part which would seriously affect the oil markets. We might see the Persian Gulf states make a separate peace with Iran. And basically give the Iranians what they want, which is the Americans kicked out of all their bases in the Gulf. And that, I think we might do that. Frankly, I think the US has let the Persian Gulf state allies down extremely badly and exposed them to an awful lot of trouble, which they don't want. And, we'll see. But at the moment, we don't seem close to either of those possible resolutions. And the war could go on for months. If it goes on for months, I'm thinking we could see, I'm thinking on SPX here, I'm thinking we could see a full reversal potentially of the entire move up from April last year. Let's face it, equities are very high valuations, the US economy is in the toilet, and we've got a potential major energy crisis brewing. And the thing is, while Trump's right about this wouldn't affect the Americans as much as, let's say, the Europeans or the Japanese or the Chinese. And he's absolutely right about that. But what he's not considering is, of course, all his billionaire buddies, in the oil business are going to do extremely well out of the conflict here. And the US consumer is going to be further crushed. So while I'm just saying that the US consumers have a lot more votes than the US billionaire oil buddies. So electorally, it'll be a disaster. And in terms of demand in the US and the economy, it's not going to be good. So it'll be worse for Europeans. Thanks Trump for noting that. That's one of the reasons that Europeans are not at all enthusiastic about getting involved in this war, because I think they're also reserving the right to make a separate peace with Iran. So I think nobody really needs a big economic crisis at the moment, and Trump has recklessly invited one, and hopefully that won't happen. But if it does, the response on equities could be big. This whole move up from April, it could be retraced. And the same on Qs, the same on Dire. All of these rising wedges, we could reverse pretty much all of them in the event that we are going to see a serious problem here, and we are waiting to see whether we're going to see that problem. All right, great. Let's have a look at the others. So DX, we've got a possible sell signal. We've got a 6-minute sell signal fixed here on ZB. I've got a possible 6-minute buy signal. Hang on. Now, we've also got a potential double bottom forming here, which I'm watching. I'm going to be watching to see if ZN, of course, we've got a target below, which we haven't reached yet. I've got that at 111.06, I think. Yes, it is. But it looks like we may well reach that at the open, in which case that'll make target 2. Won't have any positive divergence there, but could we see a rally here? Potentially. CL, we've seen the head and shoulders broke down yesterday, but it hasn't got back to the retest of the high yet. I was thinking it might do that overnight. That's at 102.50. At the moment, it's heading in the other direction. HO, we've got a sell signal fixed. Obviously, we've already taken out the March 9th spike high. I was talking about this yesterday on the bigger picture. No divergence on RBOB, but obviously that's over the March 9th spike high as well. NG, obviously, the field that was attacked in Iran yesterday was a natural gas field, and natural gas had temporarily suspended their gas exports for Turkey. This could cause a big problem in Europe and in Turkey. And I suspect there were big representations from the Turks and the Qataris and the Saudis yesterday about Iran starting to basically attack their infrastructure. And if we do see those attacks go ahead, and we see a lot of attacks on natural gas, then we could actually see a big move up on natural gas. So watching out for that. We've not seen that really respond to the war so far. GC, is going down. I was laying out two options here where we could have a bull flag forming here, we could be heading higher, but I have been talking about the likelihood that we would see a lower low below this low, and it looks like we're going for that. We saw a break of support yesterday. That's been accelerating overnight. SI has been accelerating down overnight and is now almost at a retest of this low. Palladium had already taken out that low. Platinum is pretty close to a retest of that low. I'm thinking lower lows across the board as part of, in my view, bull flags forming. Because I do not think the bull market in precious metals has ended, but I am thinking that we have a bull flag forming, a period of retracement. And at the moment, I haven't really seen much of a response to the Iran war on precious metals, and we're just playing that out. So I'm just treating that as though the Iran war is not happening, because as far as precious metals is concerned, it doesn't appear to be happening. In terms of HG, I was expecting to see a test of this low. It took a while, but we got it yesterday, and it's continued down. Again, as expected, we do have a possible buy signal brewing here, but we could just fall through it. We could fall through all of these divergences. But the fact that these divergences are here is a cause for concern. All right, KC. Looks like a bear flag forming. Still wondering if we might see this double bottom target in the 308 area, but not particularly convinced that's likely. SB, we've seen a nice move up, and we have made both, well, pretty much made the extended target. We certainly made the first target of the SB IHS. So that is signed off, no current negative divergence. CC, looks like a bear flag forming. CT, I'm thinking that CT... ZW, well, basically cotton, wheat, corn, soy. These all have big reversal patterns and are all seem to be affected by the squeeze on fertilizers from because a lot of those come through the Gulf too. So I'm thinking if this war goes on for a while, we could see some big targets. I was laying all of those out on the bigger picture yesterday, and I'm thinking they're on the table. Looking at lumber, continuing higher at the moment, possible weak 6-minute sell signal brewing. We've had that before, of course. The last one just failed. The divergence failed, so we could see that again here too. ZW, wondering about more upside. Corn, wondering about more upside. Soy, don't actually have a pattern for more upside, and we do have what is a double top that's broken down here with a target in the 117 to 120. 11. Hang on, I've missed a one there. All right, 1117 to 1120.75 area, and this looks like bear flag forming, so I think that's still on the table. In terms of and we've also got, of course, sell signals brewing on on wheat and on corn, making me think that we may be about to retrace on these. Again, that's Iran related, and we're not seeing any sign of a rally so far, but we did have some downside targets, and we've kind of made those. I am wondering about a possible rally, but we may not see it. There's not really a lot of good news, but Trump actually trying to de-escalate, that is new, and that is very significant. Much of this war is obviously it's Iran's hands too, but really much of the direction of this war is in Trump's hands. And if he wants to de-escalate and start making more peaceful noises, then he's able to do that, and that could have a big effect. All right, live cattle. Likely bull flag broken up, looking for a retest of this high. HE, I think this is making the possibility of another leg down on HE is lower as well. May see a retest of the February high there as well. We do have a weak 6-minute buy signal fixed. All right, great. Let's have a look at questions. Yeah, the question was, do you think boots on the ground will create a market? And I think, yes, that may well create the market, and I think we may well see that within days. But for the moment, we are seeing a few shoots suggesting we might see some more sanity prevail. That would be good for the market. That would be bad for bears here. It'd be good for oil bulls, bad, and good for equity bulls. Sorry, bad for equity, bad for oil bulls, and good for equity bulls. So, if we see a de-escalation of the war, which means the Strait of Hormuz opens and the Persian Gulf states effectively have hostilities ceased against them, then yes, this could all go away. All right, great. In that case, I think that's a wrap. Everyone take care, and I'll catch you guys tomorrow.